All right, how's everybody doing? Let's do a audio visual check. Make sure everything's working okay before we get started. I'm gonna get a few things set up on my end. So give me just one moment and we should be good. Looks good, sounds good. Okay, well, let's get started. Welcome to Slow Markets, everybody. I'm Coach Dakota, Coach DBA. As always, there's our Topstep risk disclosure in the chat. This is not a signals class. This is for educational purposes. Yeah, say it every single night. It's very important. I see traders all the time who exactly do the opposite, and they take it as signals. But tonight's a new one. It's a great week. It's been a very crazy day in the markets, of course. And what a way to start our Monday night and start reviewing statistics. So we'll go through, and I'm going to just repeat this throughout the week so everybody knows, and we're all on the same page. So I'm going to be doing the rapid fires. So I'm going to analyze, NASDAQ, crude oil, maybe Nikkei, and then gold. And then right at 8 p.m. Central, we'll take a look and see if we can get a gold breakout trade during the spike in volatility. And then we will continue with some statistics. So if you guys are wanting to have me review your statistics, we do have a link, and I'll go over this again after I do my analysis. But in the chat, I'm going to make it pinned. Let me see if I can pin this. There you go. It pinned to the chat is a link to Topstep Discord. I have my channel, and if you would like me to review your statistics, go ahead and send me the link in that Discord channel, and I'll go through 3 or 4 traders' statistics. We could do a Q&A and see how that goes. I think it's going to be great. We're going to be able to get everybody involved, hopefully answer some questions, and make it very educational and see how it goes. Like I said, this is a test, a trial to see how reviewing statistics live is going to work as a group. But let's get started. I have a daily chart here on the NASDAQ. And what a wild ride. I mean, and that's even an understatement. Look at this move. Last night, we all seen it. We were all here. We were watching the NASDAQ just completely sell off. We was watching the Nikkei and the markets. Like, it was a very scary evening, right? How do you sleep? How do you manage through that? It was very difficult. The best thing, for me to do, and the best thing for others, was there's a lot of fear in the markets, and to not trade. And just going through today, you could see that the high of last night was where we opened on Sunday, right around the high 300s, and the low for tonight, the day, was 1,000 points lower, just over 1,000 points. That was the daily range. That's absolutely insane. And then what's even just as insane is we rallied all the way back up. We are already back up above 18,000, coming up to test 18,300 as we speak tonight. And what a volatile moment in time in the market. And if we just go back, we don't have that kind of volatility in anywhere in this recent future. Like, look at this massive sell-off. Look at the massive day, and trying to compare that to any time for the past year or so. You basically have to go all the way back to 2020 to see some type of volatility like that. So that being said, same thing. Scale down. Be careful where you're getting in, where you're getting out. And as you guys can see, the DOM, the depth of market over here on the right-hand side, is still really thin. It's not as bad as what it was last night, but it's still really thin. And market orders can take a hit at your P&L. 1, 2, 3 point spread, but not as bad as last night. So that is good to see. That's a positive note for the markets. And it's very positive that we rallied all the way back above the 18,000 level. So hard to do much analysis here on the daily, other than we came down here, immediately rejected. We're right back, around this 18,200 range. And if we go ahead and start to zoom into a hourly chart here on the NASDAQ, we do have some clear and relatively clean price action. And seeing that as a very clear double bottom. And we had the double bottom. We had the confirmation of a beautiful breakout. We broke out today, and then we went back. We pulled. This was resistance during the London session. That resistance got broken out of, and it became support during the afternoon session here on the NASDAQ. And here we are. Is this going to be the same thing where this is resistance? And if we do, are we going to see another breakout and maybe a run to come up and test this gap fill where we gapped from the Sunday open? Maybe. That's definitely a possibility, and that's something I'm going to be watching tonight and going into tomorrow's fast markets. I'm on fast markets with my trading buddy Rips. It's going to be awesome. It's going to be fun, and this can become something to be talking about is the Sunday gap, where we opened up Sunday, where we closed Friday. Are we going to fill it? Is it going to become resistance? This is going to be the questions that I as a trader am going to be watching and thinking to myself going into tomorrow. Now, very well, we could just sell off and go right back down and this crazy volatility, but as of right now, we are pushing higher. This has been a really big rally coming from these lows that we got during the overnight session last night. And once again, in another 12 hours, it's a completely different market. Like every single night, just 12 hours, things move. 1,000 points up, another 12 hours, 1,000 points down. Here's another 12 hours, 1,000 points down and up this time. So crazy market, crazy volatility, and it's really something to behold when it comes to placing trades, managing risk, and understanding how to navigate the markets. And so it's something I'm watching. Do we break above this or do we come back down? The way I'm looking at is, of course, this key resistance zone and then this key support zone. So maybe we get some consolidation. I would love to see consolidation. Is this consolidation? Is this a 300-point range in terms of consolidating in between this? I'm not sure. I just want to see a nice, slow consolidation, consistent market. And so far, we have not seen that. And it's been anything but slow and consistent. Now, as we zoom down to a 5-minute chart, it's basically the same thing, right? If there's something to, as a bull, as somebody who is liking to buy the market when it's down here and looking for opportunities to buy, I think this is a very clear picture of, even if it's not from a bull's perspective, this is from a technical perspective, is look how beautiful of a pattern that we seen today here in the NASDAQ was a beautiful technical pattern where we had this double bottom, we had this breakout, we had a test right back into the zone, and then when we were in this zone, we seen this consolidation, and then we got a very clear breakout near the end of the day, broke out, consolidated, and sure enough, we did break out again as we opened up at 5 p.m. Central. And, it's kind of the same thing. We broke out of this at the open at 5 p.m. and we went down. We tested the breakout, and now we're continuing to move up and, cleaning my charts up. Is it the same thing? Are we seeing it right now as I'm speaking where we broke out of this? We broke out and, maybe this is a pullback. We've seen the consolidation for the past, 5-10 minutes, and we're starting to break up again. And so do we come back and see a test of the 300s, looking for a break? This was the New York session high. I'm not sure, but very technical market in terms of, as a trader and trading this from pure technicals. It's been very fun to trade. It's been very volatile. And these moves are not small. I mean, just as we were speaking on this one, if we're buying a pullback and a break of this consolidation, that's 20 points, right? That's a 20-point move in the last 5-10 minutes here during slow markets class, during the Asian session. So these are in no way small moves, even though the candlesticks are still the same size. Other than that, I think it's just wait and see, see profit, take profit. I'm looking for areas of opportunity to, as of right now, buy the dips, maybe looking for just these very basic, simple patterns that tend to play out during this volatility where we have pullbacks, consolidation, a breakout, pullback, consolidation, breakout. If we do get a breakdown, then essentially it's the same thing, right? You are looking for the exact same thing, but in reverse, a pullback, consolidation, and maybe a breakdown, and then continue back down to this support zone around the 17,009. It's basically this lower 17,900. It's a very volatile market, and micros, right? Micros. I'll go over it more in the statistics, but let's go ahead and move on. Let's move on to crude oil. And as I'm continuing to talk, please remember, if you have questions, just type them in the chat. We have an amazing moderator who's able to, feed me those questions, and I'll get to them when I am done with this analysis. So here's the daily on crude oil. We are seeing a lot of buyers step in around this, $73 a barrel. Very much something I was looking at. It's a little bit further down, similar to what we were talking about last night, where I love to look for in crude that run of liquidity, a lower low, and then that reversal. So we got that. We got the lower low here in crude, and immediately rejection. This is a very bullish candle from a technical standpoint. It's a hammer. It's a indecisive candle. We went all the way down to basically 71.60s, rallied all the way back up to 74s. The high of yesterday was 74.40s. And so maybe if we do get a break, we see a bigger continuation back up to 75 and maybe a push higher. Yeah, that is definitely something I'm going to be watching. Starting to be a little bit more bullish on oil based off of this, but anything can happen. Let's take a look at the hourly chart. Kind of the same thing. I would much rather, this is quite the rally, today since the New York session open. It's hard to buy it. You could see this support resistance zone right here that we are getting up to. The better trade for me, and the better trade that I like, is a pullback, maybe a pullback down to 73, and then I would start to look for some type of reversal pattern to get in long for a push back up to 74.50s and this resistance zone, and then maybe get a break and a run back up to some higher prices, maybe 76. But I would wait for the pullback and not just buy it, right? Because this is we've been in a very bearish trending market. This has been a very big sell-off here in crude. So I want to just be buying for no reason. I will wait for some type of reversal or structure or technical pattern in crude, and then look to get long. So trying to find a way to buy the pullback, but if not, it would sell off, and I don't want to be trying to just buy it without a reason, even though I love this pattern on the daily chart. That's what I'm watching. 5-minute chart, it just kind of brings a little bit more clarity where, we looked at the daily, very similar to the NASDAQ, very clear double bottoming pattern, pull up, come back, test. Someone can argue from a technical standpoint on the 5-minute chart, this was a shoulder, head, and shoulder, and there's maybe like a neckline somewhere around here. I don't know, however you want to draw that neckline, and a break of the neckline, and we're continuing up. So there could be something to this, to where if we start to break above this support and resistance zone, if we break above that, maybe we come up and see, do we see 76? Do we see 76s? Not sure. I'm going to wait. I'm going to be trying to be patient, wait, and find a better opportunity. I would love for Crude to pull back and then look for opportunities to buy it at some type of support and resistance zone. And that first one I'm looking at is going to be these 73.40s. And the second one is what we were looking at earlier on that higher time frame, maybe closer to $73 a barrel. Or, you know, if this thing just keeps running, it's going to run without me. All right, let's take a brief look at the Nikkei. Nikkei has been a hot market. Oh my gosh. And yes, it is. There it goes. Wow. Okay. This is a 5-minute chart, and the Nikkei just broke out 500 ticks or 100 ticks since then. That is quite the move. Wow. Yeah, I don't want to sell this type of momentum. Like, that's a really big move here on the Nikkei. Let me look at a higher time frame. Yeah, I don't want to just jump in and buy this, and I do not want to just jump in and sell it either. I would rather wait and just let this market volatility just do what it wants. For me, it's hands off on the Nikkei. This is just too crazy to trade. It's just wow. Be patient. Don't force anything and wait. That is one heck of a move. Like, it's one of those, that time, right? This market volatility, that is a big break. And I bet is the NASDAQ pushing as well? I mean, that's what you get when you have thin markets. Yeah, oh wow, that's same thing with the Nikkei, right? That's a 60-point move since we started class almost. That's a 100-tick chart. Let me move back to a 5-minute on the Nikkei or the NASDAQ. This is the NASDAQ. So yeah, we're getting that break. We're getting the break of resistance. We broke the New York session highs. There's the support resistance around there, and if we even extend that, sure, right? We're breaking above. We're breaking out. Next stop I am seeing is 380s, 370s. That could be a possibility. It looks like we found a little bit of resistance here, a little bit of resistance right around these 330s from yesterday, where we've seen some resistance. But nothing major until possibly 380s, 370s. Yeah, very thin, very, very thin. I think it's going to be the same thing when I'm talking about the Nikkei. I'm not going to trade this. I'm going to wait. I'm going to wait for a very, high risk rewards trade in this type of a market where I could limit my risk. I don't want to be chasing it to the long side because this market is just moving. I mean, 5 minutes, we went from 275 to 239 here in slow markets, fast markets, if you will, fast markets at night, fast markets at dark, after hours, whatever we want to call it. Hassan Hope says the Nikkei was halted an hour ago. Is that true? I mean, it wouldn't surprise me if we seen a halt in the Nikkei because of all this crazy volatilities. Yeah, fast markets after dark. This is just nuts. But anyway, let's get to gold. We have a gold trade and a gold trade to look at right at 8 p.m. Central. Let's analyze gold and let's see if we could find any opportunities to, yeah, kind of the same thing, right? We had that huge sell-off for some reason in gold. We had that. I mean, these markets are all looking pretty dang close in the way that I'm viewing it. Someone says, yep, Nikkei halted up 7%. Interesting. So, yeah, gold. Bullish. It's looking pretty dang bullish where we had that huge sell-off. We got this, nice little pullback. Now we tried to sell off again and have kind of a continuation. However, that did not go as planned for the sellers. We broke right above. We broke above that. And the next area I'm looking at in gold was we've seen a lot of support and resistance. Like this is going to be an interesting zone. Right into these lower 60s is where we've seen a lot of resistance and a lot of support. So I could see, maybe gold coming up into this zone and then finding support and resistance. We're moving quite a bit right now, and it's right before 8 p.m. Central. So it's going to be interesting to see how this 8 p.m. trade plays out. Yeah, we are kind of just right there. I mean, this is where we started to break during the London session last night. So this was the London session. We started, there's a lot of support resistance in here. And we're right there right now around 24.58. We touched 59. So let's watch and see. It's going to be interesting because we're getting this move right before the 8 p.m. Central. So maybe what I would like to see in gold is if we get a pullback, then I would like to see if there's an opportunity to get in long. I would like to see a pullback down into this resistance zone. And for me, if we do get that pullback, that could be that cheap trade I am looking for, where basic technical analysis, we break out, then we look, so here's that breakout, then we look for a type of pullback and then reversal around, what used to be resistance, looking for resistance to become support. And then when we get that, reversal and that technical pattern, then would trigger me into enter. So let's watch it. 6 minutes left into the 8 p.m. Central. I'm going to zoom into a 1 minute chart. Oh, that's the 1 second. We'll go to the 1 minute and see if we could see any more key points. So this is a key area, right? I would say right there. That's a pretty big zone. It's $1.70. We'll watch. Okay. We're going to watch this. We're going to watch and see how gold reacts right here at 8 p.m. Let me get to a couple questions. Now, remember, if you guys haven't already, it looks like we're getting a lot of submissions already for statistics. We've got about like 7 or 8 of them. So feel free to share that statistics link. It's pinned to the chat. After this gold trade, after we watch gold, I'm going to do a Q&A. We're going to answer some questions, and then I will review statistics as a group. We'll go through questions. I'll try and talk through statistics. We could learn together. We could talk through, how traders are doing. And I get a lot of questions like, how do these statistics look? Or what does my risk reward mean? How do I become a better trader? And we'll walk through that and hopefully get to a point where slow markets and the last part of slow markets is very efficient, very effective, and is able to be of great value to everybody. Let's see. So yeah, we're just going to watch this. Everything else is moving, right? Do we have Nikkei just pushing to the upside? Nikkei's just going. It's just going. Still no liquidity. Like if I pull over the DOM, like just look at that. Just no liquidity. It's same as the NASDAQ. It's almost opposite of how it was last night. Last night we had no liquidity and the market was just selling off, and here we are again, very little liquidity. We have a little bit more than last night, but it's just going straight north now. NASDAQ is doing something similar, right? Where we had that huge move to the upside, and here we get. Are we starting this move? So crazy. Yeah, I do see if we continue these upper 300s, 370s, 380s can come into play really quick on here. Let's take a look at gold. Gold's pulling back a little bit. A couple dollars here on gold is pulling back. I'm going to get this ready. There's that. And we'll see if we go with the gold trade. Richard Harris, 100% recession. Well, some people are starting to talk that there are a lot more signs now than there was, and that adds to a lot of the fear in the markets, right? Pulling back. We're pulling right back. Let's see. 2 minutes. 2 minutes to the 8 p.m. open. Now remember, this is not a signals class. This is for educational purposes only. I am going to be trying to place a trade, and we're going to review it, and it's purely for education, to where we could talk through how I get into a trade. How do you trail the stop? Where do you put stops? Where do you take profits? And just the overall management of a trade during a time of a spike in volatility. And for this instrument, we are talking about gold. NQ is up 1,000 points from the low this morning. Yeah, it seems every single night NQ has been moving 1,000 points either up or down. So still getting a little bit of a pullback. We are not quite to the zone yet. Doesn't mean that we can't find a reversal here. Let's see. I'm looking for a reversal. I'm gonna see if we could get a reversal. It's almost 8 p.m. Central to see that spike in volatility. I'm looking for a reversal. Okay, we're now in this zone of where we broke out of. Now, waiting for the market to say get in, right? I'm not going to just buy randomly, trying to catch a falling knife. I'm going to wait for some type of confirmation, whether that's being a 3-bar reversal, maybe the market starts to slow down. We touch that. We touch this box, right, where this zone where I was looking for resistance to become support, and we're finding some buyers. So I think that would be a great way to get in. Let's see if we could get in at the bid on this, or if I'm just going to miss that opportunity. That's not what I was really hoping for. There we go. I'm going to move my stop loss right there. And so I think that was a decent trigger. We're starting to see that spike in volatility as expected at 8 p.m. I'm going to go ahead and get rid of that. I'm probably going to move this at the bottom of that consolidation zone. So yeah, right through that consolidation zone. So the market would have to push through. And let's see. Let's see if this was just a fake out or not. The first thing I'm watching is we are right back down into this resistance. And if it continues to reverse, I would actually like to get into a second position if we have a continuation and a break above this 57.4.5. So let's watch it. I'm also going to be watching for a trade to where I can move my stop loss. I'm okay with moving my stop loss relatively quick. The sooner the better until we get that confirmation. So far, actually, 54.9 is not looking like too bad of an area for a stop loss, to where if we do get that break, then I'm okay with, starting to reduce my risk and put my stop loss at 54.8, 54.7. We'll see. Consolidation. I like this consolidation. Okay, I think that's good enough for me where we've slowed down. I'm okay with, moving my stop loss to 200. We didn't get that follow through. I'm looking for us to break up. If we do, then I'm okay with adding. Now remember, this is just how I go through and talk through a trade. This is a kind of a scalp. This is a breakout trade, the reversal trade for this example, an increase in volatility. That's basically what we're playing for. And I look at gold and I watch this basically every night at 8 p.m. For the past few months. And so far, it's been really good. Some trades have been great. Others been kind of choppy, and it's been chopping me out. This looks to be one of those where it might just chop me out for minus $200, which there it goes, minus $200. So even though I'm stopped out, this trade to me can still be valid because we haven't broke all the way through, and I'm okay with re-entering. I'm okay with re-entering if it does reverse again. Yeah, gold can be messy to start, but when we break, oh, it's a great trade. So let's watch. If we get that reversal, I am perfectly fine with getting in again, looking to get into maybe those two positions. we'll watch. We're still finding buyers. So the first thing I'm thinking of is I had my stop loss possibly too tight. So my stop loss was originally down here at 52.9, and then I moved it up, right? So I moved my stop loss up to here, and you know, sure enough, the market did come down and stop me out. I'm going to see if I can get into a second trade if we break up. So same exact trade, exactly the same. Setup still good. We're still finding buyers right into these 55s. So we'll see. But they're not pushing it up into these 56s very, very well. Beats per minute, like my heart rate. This is, like I said, this is only demo money. This is for educational, to see how I get in, how I manage trades, where I put my stop loss, and so forth. So still finding buyers. Okay, I'm going to go ahead and move my stop loss back up here again. See if we get that nice breakout trade to the north side. No, this is not a live account. Once again, I put the risk disclosure in there. This is purely simulated environment and for educational purposes. This is not a signals class. Educational purposes only. We're walking through this trade. I walk through it basically every night. During slow markets, we talk about gold. I go through a trade example. I'm still analyzing gold, and you know, if the setup's really good and I'm feeling, you know, confident and based off the statistics, yeah, I might place it in my live account or in, you know, an XFA, for example. But this is, once again, not a signals class. You guys would be surprised on how many traders just hop in and are just trying to get signals, like, you know, for some reason, I'm going to make them profitable by just telling them where to buy and where to sell. But, you know, this is a great example of, you know, learning how to trade, talking through some questions in terms of, you know, how do I put my stop loss? How do you get into the market? How do you get out of the market? How do you manage a trade when the market is not doing what you want it to do? And this is a good example. This market, for lack of a better term, sucks. This market's not doing exactly what we want it to do. Of course, you know, when you get into a long, you want the market to just go straight up. Everybody wants that, but the market doesn't always do it. And hopefully this will give everybody some education as we go through this, as we take notes. So it just triggered me into that second contract, risking $510 now. Let's see if we could get a push. So my first target might be this high, the high that we made here around 59.4. If we get up there and trailing it, let's see how we would trail it. I think I'm okay with, you know, if we continue to push higher, moving my stop loss up. And we'll go through examples of trailing it, where, you know, how would the trade have played out if I do not move my stop loss? How would the trade play out if I move my stop loss? Maybe if I move it to break even, and go through these different scenarios and maybe write through a journal to say, you know, this is what we're looking for. And actually, I did catch that I need to be having this in ticks. So ticks is a lot more important. There we go. Because we're looking through it in the eyes of ticks. So I'm going to go ahead and just say my entry's there. So I did get stopped out. So I'm going to go ahead on my very first trade. This is the way I like to journal. Take a screenshot and then you could take notes. So let's go first. And this one's look like it's going to stop me out again. I think it was minus, I think 20 ticks, right? So as I go through this, and this one's probably going to stop me out too. So first entry stopped out, minus 20 ticks. Second entry looks like it's going to be stopped out, minus 25 ticks. And then I'm going to just review this trade once it does stop me out. If it stops me out, anything can happen, but it does look like it could very well stop me out. We got that fake out to the long side, and we are continuing to push these lows in the 55s. But here's the question: if this does stop me out, the first thing I ask myself is, what should I have taken this trade? And so far, yes. Regardless of whether I got stopped out, I got triggered in this twice. If I get stopped out twice, and I ask myself, should I have taken this trade? Would I take it again? Yeah, I would. It's unfortunate that it triggered me in twice, right? We had this, fake breakout to the downside, stopped me out, went right back up to these 58s, triggered me into a second one, and then immediately right back down. But it hasn't stopped me out yet. So, it's just one of those trades. It looks like a head and shoulders. From this 1 minute chart, maybe if you're talking about this is a shoulder, a head, and this is another shoulder. But we'll watch it. It's not stopped out yet, even though it looks like it. Okay, why did I get into this trade? I have a couple questions coming in. Why I got in? So, 2 reasons. We're looking for a breakout trade. We did start to go and break out. Now, if I zoom out to this longer side, and like I said, that's really zoomed in, okay? We had a major resistance zone. So I was looking at this as resistance. We broke out to the long side. We came back and pulled, and we started to test this zone. And there was buyers stepping in. We showed that there is some 3-bar reversals. There was a lot more buyers stepping in around these 24.55s. And then I got in. I got triggered in for the first time up like around these 24.56. And then it stopped me out. The second time was exactly the same reason. We pulled back, we found the buyers, and I got triggered in again. And it was the exact same trade. Copy, paste, same trade. And, this time it didn't stop me out. It looked like it was going to. So I'm going to go ahead and just keep that there, and I'll edit the text if it works out. So let's see how this one, if it's going to just whipsaw and find resistance back up into these 57s, maybe 58s, or if we're going to have a beautiful clean break. Now we stopped out, how many ticks was we stopped out for? I said 20. I'm okay with just saying 20. It's probably less than 20, but that's okay. Actually, we could see right here, 200. So there we go, $200. Here we go. Let's see if we get this nice clean breakout. How do I know when the buyers are stepping in? It's just, look, there's a lot of wicks that happened here. Every time we push down, we go right back up. So here we are, testing these 80s, 58s, testing these 58s. Now, the question we say is, when would we move our stop? When do we take profit? Let's take a look at the 5 minute and take a look and see if we rally up, where could we go? First area that I am liking is maybe around this 63 level. So maybe 63 for a first take profit. Second one, maybe we could just trail that second one and see if we could really catch a nice runner. So 63s, we'll see how we break up and if we could get in or out on this particular trade. Okay, this is going to be a good test right in these 59s. 59.5. 59.5 is going to be that high. And a break there, we'll see if we can get some nice volatility and a break higher. If not, then that sucks. So, do we move the stop loss? That's the next question. Or the question that we always like to ask is, when do we move the stop loss? As analyzing a new strategy, that is what we're looking for. Now, if you already know, right, you shouldn't be asking yourself when you're trading in a live account or in a XFA. You should know how to be managing the trade. But because we are trying to learn a really good I guess, strategy or trade at 8 p.m., I'm asking that. And there's a lot of new questions who are learning and trying to figure out how to do these things. And that's one of the most important questions is, when do I move my stop loss? Do I even move my stop loss? And then it's the same for the take profits. You could have easily, and I said this when I first got in the trade, we could have easily taken profit, see profit, take profit, right? So that is an option. Is that the right thing to do or the wrong thing to do? You don't know until after you've done this enough, and then you could analyze your statistics, where we could come in and say, okay, if I would have taken profits, then, it was plus whatever. So we could even take a note, right? We can say, and this is part of the journaling, where you can journal on here, and then you could take a screenshot and save it. So we could even put a note like, if TP, let me go ahead and just do a quick 22 ticks. So if TP at first resistance, then 22 ticks. Now, forgive my spelling. So this is a scenario, right? An if scenario that we could go through and we could review this and say, we could have taken profit at this first resistance and locked in 22 ticks. Now, we didn't, and we're going to see how this trade plays out. The second one is we're starting to see a little bit of a pivot and some buyers stepping in around these 57.3. So another example could be, moving your stop loss to break even. So, a lot of traders I do know likes to move their stop loss to break even. So, theoretically, you can come in here and say, what if I would have moved my stop loss to break even? Move stop loss to break even. So for example, you could also do this. I also like to do that because the question would be when, right? Not only the fact that you do move your stop loss to break even, the question is, when would you move your stop loss to break even? Because that is another key thing. And you want to do that for a reason, right? Just not based off of a feeling. You don't want to just do things in the market because you feel like it. You want to have a nice defined set of rules that you can measure, that you could review statistically, and then you could change if the market changes and as you see the results. So for me, this could be a good reason. We broke up here. We're starting to consolidate right in these 57s, and we're kind of pushing a little bit higher. So to me, this could be a good reason to say move stop loss to break even. And if we do break down, then that could be an invalid trade. So this is a decent example if we were to move our stop loss on this gold breakout trade. Let's see how this gold trade plays out. We've been in it for about 16 minutes, and this is a very great theoretical. I'm going to keep my stop loss there, but we're going to keep track of this. And just like we've done before, what we'll do is we'll take a screenshot, we'll save it, and we'll keep it in our notes. So I've taken a few, and let's see if I have a few examples. Let's see. Yeah, so here's an example. You could probably see this. Here was one example, right? So here is an example from last night. You could take a screenshot. You could add it to the journal. That is another one. Here is another example. This was a great trade. This is very similar to tonight's, right? Where we got triggered in. Here was our first entry. Here's our second entry. There's our first take profit, 20 ticks. We trailed it and we locked in, 52 ticks when gold broke out and we hit 2,500. That was a fun one. And, here's another one. This is very similar where, let's go ahead and see. Market came within 3 ticks of our take profit. This is one where we got in. I didn't do a good job at putting where our entry was, but you can see it came in within 3 ticks of our take profit. We had an example of trailing it. We had a couple examples and then our original stop loss. And so here's one, right? So if we would have moved our stop loss to break even, it was -0. And I like to put an if statement as we go through that. So we'll let this gold trade play out. So if stop loss moved to break even, we would have been stopped out, and we'll continue to play this as, what if we would have kept our stop loss where it originally is? Do we get that continuation of the breakout of this high of the 59.5, or do we get stopped out? We'll go through these different scenarios. I'm going to get to a few more questions, and then we'll do the fun statistics review. We've got a lot of statistics reviews and submissions. That's going to be a fun thing. I do see Hogue in the chat. He's up a little late watching fast markets after dark. We've decided to label tonight and probably this week fast markets after dark because of how volatile the market has been, and it's been pretty dang crazy. So anyway, let's get to some questions and we'll start talking about some statistics. Dakota, how much does cumulative delta play into your entry? Stas, I do not look at delta and I do not look at cumulative delta. Most of what you see me trade and how you see me trade is based off of pure technical analysis. And a great example is if we go over to NASDAQ, I want to show a really good example. This has been the NASDAQ and basically today on the NASDAQ. And if you see and look how, and it looks like we just got stopped out of the gold. So if we see the NASDAQ today from a very basic and pure technical point, it was very clear. And this is how I trade it. So, buying pullbacks. And even again tonight, where we're seeing these very clear and defined breakouts. We break out of, support or resistance, and we find a pullback, and we find areas to enter into this pullback. And that's it. I try and go through and analyze the markets each night, kind of go through a rapid fire at the beginning, and then we go in and we start talking about this gold trade and try and analyze this gold trade. So this one's now over. So what I'll do is I will make sure it's very clear. So there's this, if we would have had to take profit, would have been great. But what I like to do is I'll take that screenshot. So download image, that is now a great way to journal. And then I'll go through, and at the end of the week or the end of the month, I'll go through this and say, how did this trade perform? Was this a good trade? Should I have taken it? First entry, second entry, minus 22 ticks. I think, overall, the way that, I most likely would have traded it, I would have lost 45 ticks on this particular trade, getting whipsawed, once, basically twice. Would I have been able to take profit up here? Knowing me, no, I would have not been able to take profit up here, just knowing the way I would have traded and watching it. But could you have? Maybe you would have been able to have some type of indicator or technical analysis that would have triggered you in or out, right? There was also, an option if you would have moved your stop loss to break even to just have a scratch trade. So a couple more questions, and we have some, traders. We have a lot of, I don't know how many we'll get through. We do have 40 minutes left of class. And so I'm going to get to two more questions, and I will start going through some statistics. Dakota, do you really use naked charts? You don't use any moving averages at all. Just want to know. Also, what is a tight stop on the NASDAQ for you versus giving it some room? This is a great question. So first of all, yes, the way you see me trade now is how I trade. I don't like a lot of stuff on my charts. I really like my charts naked, and naked as in no indicators, nothing that will distract me from watching pure price action. This is the 1 minute, but I like the 5 minute. And, if you've watched the beginning of my slow markets class, then I like to use a higher time frame, and then I zoom down to a lower time frame. And keep it super simple. For me, the more simplistic that I can make my trading, the less I have to look at, the less decisions that I have to make. For me, that means the less human error, the less room I have to like mess up my own trading, self-sabotage. And I find the most simplest forms is typically the best. Like, how about right now? Holy cow, I didn't even notice that. That is quite the move here in the NASDAQ. We really got up all the way to 400s. Did we really get to 400s while I was just talking? Wow, let me look at this. We did. We really did. Wow, that is something to see. So here it is. This is an example. This is how I trade. We jumped all the way up to 430s, and if we zoom into a 5-minute chart, there is a trade that I missed. I missed this one. So there is a 5-bar reversal right there. I might have been able to get triggered in right around 364, 365 to the sell side. Wow, that happened really fast, and that was, yeah, fast markets after dark. Like, that is quite the move. And here's the Sunday gap. So if we want to measure that, this is where we closed Friday night. This is where we opened. This is the Sunday gap. It looks like we tried to go through and break. We did not. We got as high as 435, 436 maybe. So right there. And, sure enough, this was support and it became resistance. Like, this is a nice zone. We didn't fill that gap completely. And wow, just as fast as we went up, we are selling right back down. And there's an example of how I trade. Something very simple, very, very simple. Get triggered in at 365, and lately I've only been looking for 20 points. So, maybe I would have been able to get in at, say, 365. Let's give it some room as if to take into consideration slippage. 363, and yeah, there's already 20 points from that. And wow, that was a beautiful trade that I did miss, and immediately, well, 100 points up and 100 points down in 10, 15 minutes. That was a wicked move at this time. Let's see. How's the Nikkei? Is Nikkei acting? I mean, it's a little more tame. I mean, tame is relative, right? It looks like we went up to 35,000 here on the Nikkei and immediately started to sell off. Well, look at that, from 35,000 all the way back down to 34,650. Now, Nikkei is in increments of $5 per tick, and it's $25 per tick in terms of value. Wow. I'm going to take a look at Nikkei again. Or the NASDAQ. Yeah, NASDAQ has just a big spike in volatility. And so I think we are seeing another just increase in volatility. What a crazy thing. Maybe there's a reason to, and maybe this is here's an example, okay? I want to walk through this example that I'm seeing right now. There is something to be said. This was resistance, and we broke out. So there could have been an opportunity to buy, maybe an opportunity to buy this into like a quick maybe bounce back up into 380s. So maybe a bounce back up and test 380, 376 for a 20-point bounce. Find some type of reversal or reason to buy it around there from a technical standpoint. But definitely not going to be trading these markets, because take a look at this. So my advice, do not trade this, because see this order book? Very, very thin, very dangerous to get caught in a bad trade. Just ones and twos, and like there goes the liquidity. I mean, the spread's decent. It's not as crazy as it was last night, but it can get ugly fast. You can see there's gaps in the DOM. There's gaps, right? There's one, and we could easily sell off. Obviously, there's an example right there. Up 100 points, down 100 points. And someone could come in here and push this market plus or minus 20 points in a blink of an eye. So, yeah, be safe. Like I said, scale down. And if you want a true example of scaling down, today I kind of gave one in fast markets. I did have one trade. I had one trade today in fast markets in this coach's account. I put 3 micros on, just 3 micros. And if we pull up the orders, those 3 micros I closed out right here. So I got in one, stopped out, 3 micros. I bought it at 17,743 and I sold it at 18,278. This is an extreme example where I caught what is this, 300, 400, 500 points, but that just shows the volatility that we're experiencing. You're not going to catch 500 points very often. That's a huge home run, but $1,000 on a micro is just amazing. Given that's been happening in the NASDAQ. And you know what? Here's an example, right? I actually like this to the long side. This is another trade example. So just on that move, we're going to be risking 127 ticks. Let's see if I can just get a quick trade. I want to try and do this as an example. 126 ticks. I'm going to just play for that little break. I'm going to trail this up. This is how I was typically trading during fast markets on here. That is crazy in terms of liquidity. Right there. Just really fast. Really, really fast. Am I allowed to ask for help here? Yeah, J-Kill. Any question? I've been answering questions throughout the evening, and I continue to answer questions, but we're going to be diving in some statistics. So give me a second, and it is now time. We have 30 minutes left. In the last 30 minutes, we said we're going to go over some trader statistics. So the first one I do see here, let me see if I could pull it up and make it nice and clear. Oh, so now here's the question, okay? As I'm going through statistics, I'm going to see if I could get through, 3 or 4 or 5 traders each night. We'll see. I haven't timed myself, and everybody's going to have different talking points. Everybody's trading statistics are going to have different talking points, so I'm not really sure of how long it will take me to go through these different traders. I'm going to try and get through at least 3 of them, but we'll see. This is the first time I'm doing it. We'll see how it goes. If it goes well, I'll be able to get through more. And then I will ask for everybody's feedback on how you guys like it in terms of, do you like how I go through these? Can I do it better? And a few of these. So here's some of them, and let me know if you don't want me to, say your name. That's always a thing, but I'm going to refrain from mentioning names. This is some trading statistics. Obviously, you know who you are. Let's go through them. And let's see. I want to take a look. And the first thing I like to look at when I look at my statistics, let me see. How does that look for everybody? I might have to zoom in a little bit, make it, that's a lot better, right? So here's one. It looks like it was started, not too much of trading history. It looks like it started on July 31st. We have only 6 days. So first of all, is 6 days to me is not a lot. It's very early. It's 6 days. So it's a very small sample size, and with anything, when you have a small sample size, statistics can change very dramatically. Just like flipping a coin, right? If you flip a coin and it lands on heads and you say you want it to be heads, then you have a 100% win rate. Then you flip a coin again and it lands on heads and it's heads 2 out of 2 times, then you have a 100% win rate. Then the next one, it lands on tails, and now it went from a 100% win rate to a 66% win rate. And so that's why I said small sample sizes will change dramatically. It's not until you have like 30 trading days, 20 trading days is when you start to see a lot of consistency in your statistics. So it's not a criticism, obviously. These are some amazing statistics as I'm starting to see here. Total P&L, so over these last 6 days, 3,000, 83 win rate. That is really high. And then this makes sense, okay? This is kind of hand in hand. You can't have a winning trade percentage without an average loss. And I see this a lot. where you have a higher winning, not you, but traders in general will have a higher winning trade percentage and a lower average win to average loss, right? So it's upside down. You're risking 550 to make 185. And here's the thing. This looks ugly, but overall, it statistically can be profitable, obviously, right? Because, this is a key factor, profit factor, the ratio of total profits divided by your total losses. The profit factor is probably more, what do I want to say? Profit factor is more important than these two, right? But each one has their own importance. And I'm going to take a little bit longer tonight. And as we go through this, I'll be able to cover a lot more traders each and every night. But as we go through this, let me know if we have any more questions. Profit factor to me is more important, right? Because you could have a trader with an 83% win rate, a third, 1/3 of the average win, average loss. It's just mentally, this can be difficult. It's great because you're seeing a lot of wins, right? See money, take money. I could imagine, I haven't seen these statistics before, but I bet as I start to go down, you're seeing money, taking money. As soon as you get into profit, you're going to be taking it. I guess, and I'm making some assumptions, and we'll go down and we'll see if my assumptions are correct. Just me reviewing this is, I would bet your average loser, your hold time is a lot longer, and that's kind of is a given, right? Your losing hold time is most likely going to be longer than your hold time for your winners because it's a high win percentage. The scary thing about this, and this is something that you would have to look out for, is if you have a string of losers in a row, 2 or 3 losses in a row will wipe up and wipe out, 5, 6, 7 of your profitable trades. The winning day percentage, 1/3, which is fair, 3-1. Profit factor is great. Let's go down. Coach T, your average hold time is 3 minutes and 18 seconds. Consider giving trades more time to develop if needed. I love this part. Most active day is Thursday. Most profitable day is Sunday. And take this with a grain of salt because it's only 6 days. So you haven't traded much. This is very hard to say. 53 trades in 6 days. That could be, to me, on a little bit of a higher end, but it depends on, the type of trader you are. I would say I personally like 3 to 5 trades a day. So I'm curious to see how this is. Best trade, 2,700. Worst trade, 2,300. So this is a good sign. I like this. This is kind of the opposite of what we're seeing, the average winner versus average loser. Your best trade is greater than your worst trade. So that is a positive note. Of course, your profit, daily P&L. And now let's dig into this. Trade count. Under 15 seconds, 9 trades. Under a minute, a total of 25 trades. And so, yeah, this is an extreme volatility. I kind of understand this because we are in some extreme volatile markets and markets are moving really quick. The thing that I was afraid of is if I look at this and take a look at this, we have, 66% and then 33%. So the majority, I'm guessing, of your losing trades, you're holding them a bit longer. And then a lot of your winning trades is really, really quick, really, really fast. And I'm guessing this one that you hold a lot longer, 30 minutes to an hour, was most likely your best winning trade, which is great to see. And those are your 3 days, right? So you still have a lot more to go through. Not a very big sample size. And then there's your trades. So there's the first one. Let's go ahead. I'm going to just go through this. Maybe we could get to 3 or 4. That took me about 7 minutes. 7 minutes. I'm going to go through a couple more. Okay, here's someone who submitted it. This is an interesting one. Let's see. Going through this. I like this one. I really like this one. Here's one. Take a look at this. This has a lot more trade statistics through it. This one submitted said this is an XFA. This is an express funded account. So to me, immediately this says there's a lot more pressure. There's a lot more pressure on this trader, as you can imagine, being an express funded account versus a combine. So this is going to be interesting to see. Man, it's looking really good. Immediately, the first thing I saw on this was look at how many days that this trader's traded. It's a good amount from July 7th, where we have basically a whole month's worth of trading. So that is great to see, which means that these statistics are a lot more consistent. One single trade's not going to blow these statistics out of the water or change things dramatically. This is a very good and solid sample size, 13,000. That's great. This proves, and I think this is going to show everybody that $13,000 in a month is a lot. It really is. That's more than the majority of people working normal jobs, right? Winning trade percentage, I like this. It's not too high, right? That's something that is very manageable, 24 to 15. Average win. Ooh, I love this one. And yeah, I see Hogan there saying you love this trade report as much as I do. I wish this is how my statistics were for the month of July. This is really, really good. Almost a 2-to-1 with over a 60% win rate, which leads to that 2.9 for a profit factor. And take a look at this. The gain is 20,000. The loss is 6,900. This is something that kind of raises a red flag. This is a little bit of a red flag, and I'm curious as I dive into these, and I'm just saying it's a red flag because it's a 100% win rate. So this is what I'm understanding is throughout all of this, is this saying there's 100%? It's a high win rate for a daily. So I'm curious as we get through this. Most active day is Tuesday, 5 active days, 8 total trades, 1.6. Most profitable trading day is Wednesday, and the least profitable day is Tuesday. So immediately what I see is there might be something to this, because I've noticed this in myself. The day that you're most active happens to be your least profitable day. And so that's how it is with me, and that's how it is with a lot of traders that I work with and that I've talked to, is the more you're in the markets, the more trades you take, whether it's revenge trading, whether it's you're trying to take so many trades, there's a lot more room for error. It might not be anything, right? But there might be something there. Like, who knows? We'll continue to watch this. And maybe there is a correlation between your most active day and your least profitable day. You just never know. But these are things that I look at when I review my own statistics. Is there anything that I could spot that could be a pattern, that can be a red flag that could help me improve my trading? And this might be one of them, where Tuesdays, for me, it's Fridays. Fridays are my worst days. Sometimes I've noticed that Fridays I've placed the most trades on Friday, and that's led me to be one of the worst profitable days for me is on Fridays. Total number of trades, I like this. 39 trades over a month. So I like that. You are not placing a lot of trades. To me, that looks like you're being a lot more selective in your trading. And look, Mr. T even called it out. You've made 39 trades over 19 days. Keep monitoring your trade frequency to ensure you're not overtrading. To me, this is a nice, I would say, sweet spot. 39 trades over, a whole month. That's great. You're not just going in, scalping, placing trades back and forth. I like that. It's not very high, and it's not very low as well. not over trading, as Hoke says in the chat. Average trade duration, 15 minutes. I like that. I really do. And as we go through, we'll see what this means. Because average trade, it depends, right? But that seems like a pretty decent time. And as I go through this, everybody, and as I continue to analyze more traders' submissions, I'll get better at talking through it. And it's only going to get better over and over. But as I go through this, let me know. Please let me know. Do you like me going over trader stats? Yes or no? I really want to know. I'm going to continue to go through this tonight, and we're going to test it out this week, and we'll see how much value you guys get through this. Because this is the way I look at my stats, and I'm going to look at this as if they're my own. And I'm going to pretend these are my trading stats. This is how I analyze it, and this is what I'm looking for. So let me know if you get value, because this is very important to me to find if I can add value and make the last 30, 40 minutes of slow markets more helpful than me just looking into a camera and talking. And yeah, we'll continue to check back in the markets. If something dramatic happens, let me know. I could just go boom, switch over. Markets hasn't moved very much. It looks like I just got stopped out on that example, but quick and easy, we can move back through those. Okay, I like this. Here is the daily net profit. So one thing, I like this because it looks like this trader can manage pullbacks, right? So being able to manage pullbacks means that they're able to, especially in an XFA where there's a lot more, skin into the game, and there's a lot more pressure in an XFA because you could get approved for a payout for the profits. So there is something to that. Nothing's getting a hand. Like, these pullbacks are not too deep. Seems like they take a loss and immediately getting right back at it. I love it. Daily net P&L kind of in line with this graph where you could see these are the losses, right? $2,000 loss, $2,000 loss, $2,000 loss. And then you have these nice running trades, 4,000, 46, 22, and 44. So now getting into the guts, as I would say, just really dissecting these analytics. Let's take a look. So we have a nice runner, it looks like, for over 4 hours. That's going to be interesting. So that's good. And that looks like that's the winner. So 4 hours was your winning trade. This is kind of what I was thinking. Maybe this is something that's coming into play. Holding your losers for a little bit longer. Like, that's something that I would look at is, number one, no criticism at how amazing these statistics are. I'm just looking for areas to improve. I don't want to just come in here and say, great job, great job, great job, great job. We're looking for ways to improve regardless of how our trading has been. Like, I can make $20,000, $30,000 for a month, and I'm going to come in and say, was there a way for me to get better or improve? So first thing I see here is 10 trades held for, 5 trades for 10 to 30 minutes, 5 trades for 30 to 1 hour, and both of those were losses. And the bulk of your winners come between the 2 and 5 minute mark and the 5 and 10 minute mark. So it seems like the 2 to 10 minute trades are your sweet spot, your bread and butter. And then you have some scalps that you're in and out really, really quick on these trades for less than a minute. So there might be something to that, and that kind of makes sense, right? Because your losers, 1, 2, 3 of these are each $2,000. So 2,000, 2,000, 2,000, which, it takes some time for the market to go against you like that. Maybe not the way the market was today, but that makes sense to me. And now let's take a look. Let's take a look at July. I love this. It looks like you're keeping your losses at 2,000. If there is any criticism, you could see how if you have one losing day can, wreck 2 or 3 days of your week. But you do have that 4,600 winner, and then you have a $4,400 winner. And then, of course, the cumulative net profit is really great. The only thing that, if this was me and I'm just thinking it from the way I trade, is if you have a 2 or 3 losing days in a row, that will put a setback, and emotionally that could be difficult to deal with. But $2,000 seems to be the benchmark. I love that. And I'm also looking at the number of trades. Look at this. This is beautiful. This is very, very underrated. One trade, 2 trades, right? 1 trade, 2 trades, 4, 1, 2, 3, 1. So 1 trade on these trading days. Like, very rarely have you went over 5 trades. On this Thursday where you took the 2K loss, that was 6 trades, right? And so I love to see this to where you're being selective, you're not over trading. And this is a beautiful example for, everybody in the chat and watching this, a great trader in an XFA who has, obviously based off this, it looks like you're eligible for a payout if you haven't already taken a payout, and trading it as if it's real money and focusing on your setup. 1 trade a day. That's all it really takes. Like 1 or 2 trades a day. And this trader has made $13,000 in profit just placing a few trades a day. And his worst trading day, his or her worst trading day, was 6 trades. So kind of similar to when I was looking at this, right? Maybe there is that correlation. I don't know. It's still only a month. It'd be interesting to see how your statistics change in another month or 2. But yeah, great trades. Like this is a beautiful example. Let's take a look at this. I'm going to look at your trade size. Let's take a look. NASDAQ and gold. So immediately, let me see if I could zoom in a little bit more. Let's see how that looks. Ooh, there we go. A little bit more. So NASDAQ, looks like your trade size is 3 contracts on the NASDAQ. So 3 contracts on the NASDAQ, 1 trade. Beautiful. 1 trade, 4 contracts. Looks like you're also trading gold, 3 contracts in the gold. Great to see. So trade size, very consistent. I like it. Yeah, very consistent. Looks some of them are 1. I like it. I mean, very little to no criticism, really. Just beautiful trades. Very, very good. Very great. I love seeing this. And I think this is an example for everyone to see. And if anything, the number one thing you guys should take out of this trader's report, here we go. The fact that you're not over trading and you're placing 1 or 2 or at most 3 or 4 trade, like very little trades. Beautiful, beautiful. So anyway, one more. Let's take a look at one more before we end class. Let's see. Okay, here's one more. Last one for the night. We'll answer maybe another question. Yeah, man. I don't know if I if I have anybody here, they might think I'm looking at something else other than a trade report. But I'm a nerd. I love statistics. A great retrade report is really good to see, and I'm excited to be doing this and being able to review trading statistics and hopefully answering a lot of questions as well. But let's take a look at this one. So again, I like the consistency. I like that there is, almost a good month's worth of statistics on this one. We have the amazing Coach T tips. Always have reasonable expectations with your trading and know that you could only get out of this what you put in. Risk management, patience, discipline will bring success in your trading. So over this period of time, the P&L 708. I like this one. There's another good one where, you don't always have to have greater than a 50% win. And here's one where you're 43% win rate because you have a great risk reward. So there you go. I see this all the time in social media and people posting, 90% win rate, 80% win rate. That does not mean anything. It doesn't mean crap, to be honest, because you cannot have one without the other. They are not independent. They depend on each other. Amazing risk reward, very similar to the previous one. And that allows you to still have a positive profit factor because of that high risk reward. I mean, even if you lose more, you could lose maybe even up to like 40, 38%. You could still lose more. And just because you have a higher risk reward will allow you to still be profitable. So let's take a look at this. Looks like it's very consistent. You did start out in a hole. So it looks like your very first day, you took an ugly loss, about $1,000 loss. And then maybe you just said, okay, I'm going to trade small and I'm going to grind your way out of that hole. And that's kind of what you have to do. If you jump in and you take a big loss when you first start an XFA or a trading combine, that's kind of what you have to do, is scale down and work your way out of the hole. Let's go ahead and scroll down. You've made 37 trades over 14 days. Keep monitoring your trades. So very similar suggestion from Coach T. Most profitable day is 309. Least profitable day is Thursday. Number of trades. I like this. Doesn't look like you're trading a lot of lots. So, 37 trades, 40 lots. So your trade sizing is, good. Average trade duration, 7 minutes. Average win versus average loss. We see that play out in this really great, risk reward ratio. And yeah, sure enough, there's that equity curve we were looking at and talking about, where you're starting yourself out of the hole. And that just makes even trading harder when you start off in a hole. But, traders who start off on the hole, here's a good example to not give up, scale down, grind it out. And with consistency, you can get out of it. A lot of traders, and I can't draw on this, but, a lot of traders, as soon as they get in a hole like this, they try and immediately get out and say, oh, is there? Immediately get out. Well, that's much harder to do. This is the way to get out of a hole. You try and be consistent, you scale down, and it's a slow grind. Like anything that's good, you just immediately cannot get out of it. Of course, sometimes, yes, you can, but that just instills bad habits. This is much better to see. And you see it's consistent, and that hopefully gives you that confidence to say, if you have this again, for whatever reason, that you can, trade better and get your way back up to high water marks with the same way of trading small, getting that high risk reward, and focusing on your process rather than thinking about this nasty loss. And let's take a look at this. Oh, there we go. Win rate analysis. It looks like, I'm gonna get better at understanding these statistics as well. It looks like a lot of your losses you're holding a lot longer, and I think this is going to be very general in terms of when reviewing trader statistics. People just like to hold their losses longer in hopes that it turns around. Now, I'm curious of how skewed, and now this is where skew is an interesting word. It just means how tilted, right? This one trading day most likely messes with the statistics, and that's why I'm saying the bigger the sample size, the better it is, because one bad trading day can really mess the statistics up and trying to understand your statistics. So if I had to take a guess, that ugly trading day might be correlated with this longer trade, but it looks like the majority of your trades are those quick scalps, which is understandable. This high volatile market, I'm seeing a lot more traders that I talk to not hold trades as long. See profit, take profit. And then, of course, here we go. Ooh, this is a big shout out. This is a big positive. Look at this. Very similar. And I think we're going to continue to see this in slow markets as I go through these trader statistics. We're going to see a lot of this, guys, where the traders who trade less will, or how am I going to put this? I think we're going to see a lot of the successful traders not be trading as much. This is a common theme, and I'm going to continue to make that point. Not a lot of trades. And look at this. Bad day was only $16, negative $16. I like to see that. It just means that you're not continuing, and you're accepting that as either a scratch day or being done for the day. Minus $85. Break even. I love that. A lot of traders that I talk to are like, hey, at break even, I'm going to keep trading. I'm either going to hit my target goal of $200 or I'm going to hit a daily loss limit or something worse. To me, having a $16 loss is more impressive than having a $200 winning day. Having that self-discipline to just be done trading after an $85 or a $16 loss is, it just shows me, and it makes sense why this is an XFA, somebody who can not lose money, right? After a day like this is more impressive than any big winning day. You give me a trader that can manage to cut his daily losses at $16, $18, and these small losses, that's a whole lot better than $1,000 winner, $1,000 winner, because just like Hogue said, it's so hard to walk away at a small loss than it would be a small profit. So I love that. That's beautiful to see. And yeah, looking at this, first thing, I like it. Look, you're trading micros. Look, there's some micros in here. And hopefully that I'm going to continue to find traders who trade these micros. It looks like some NASDAQ minis, $200. Not trading big. I like this. Not trading big at all. Not a lot of big losing trades, minus $5. And it kind of just shows you that, gold and NASDAQ, ES is another market that you're trading. Perfect. Great. Another great statistics. I love it. So far, the theme looks like be more selective with your trading. Don't trade so much. And the traders that do have that higher risk reward seem to be doing great. And I think we're going to start to see a nice majority of different statistics where traders could have lower win percentages, higher win rates, and vice versa. So there it is, guys. And it looks like the majority of you maybe liked it. We're going to see how this goes. For the rest of the week, I enjoyed seeing these statistics. It's really nice to see. I think this is a great addition to my slow markets where we could go through this the last 30 minutes. Hopefully it's added some value to everybody. Certainly I feel like it has. I've really enjoyed it as well. And we'll get it to where it continues to get better and better and better. Because that's what I thrive for, is I'm going to make slow markets as good as possible, even though these markets are very crazy right now and we're getting a lot of volatility. Yeah, I'm going to be on TopstepTV early in the morning. Some of the plugs that I did miss, we have the amazing D that comes on at 3:30 a.m. During the London session. I could only imagine there's going to be a lot of volatility during the London. We do have a pickup in volatility. So if you guys are international or if you just can't sleep at 3:30 in the a.m., that is something to see. I've started to really enjoy my sleep, so I have not been trading the London session as much as I should be. But yeah, D, I'm so happy to see her on TopstepTV and doing that London session all the time. Other than that, yeah, love these statistics. And I will see you guys, if not tomorrow night, then